Hey, what's going on everybody? Welcome back to the channel. I'm Waller's Wallet, and in this video, we're gonna take a look at how much money you would need to invest in order to make $1,000 per month of dividend income, and how you can best set yourself up to reach this. Now, if you want a simple way to help out the channel, consider hitting that thumbs up button. Also, don't forget to subscribe to the channel and turn that bell notification on as well so you don't miss out on future videos. Now, making passive income is the dream, right? Having your money work for you to where you can live on it or even offset your expenses and not have to work anymore and just enjoy whatever it is that you want to do. Maybe you want to be on a beach somewhere drinking a fruity drink, maybe spend a year backpacking or so throughout Europe, or maybe you just want to live in a cabin somewhere on the mountains away from everybody else. It's really all about how you want to live your life. And the amount of money that you would need to invest to make $1,000 per month in dividend income is going to depend on where you invest your money. But first, if you don't know what a dividend is, it's where a company pays their shareholders or investors part of their profits for investing in their company or in their particular fund. It's also important to note that not all companies pay out a dividend. And dividend yield rates or their dividend payout will be different for each company or fund. And you can quickly find out what a company's dividend is right online. But for those of you wondering how often are dividends paid out, dividend payouts are usually done on a quarterly basis, but there are some that are paid out annually. And we'll touch on why that can matter and how that can impact your investing later on in this video. And you can reinvest your dividends or you can take them out as a cash payout if you choose to. But when it comes down to it, how much money do you actually need to invest to earn $1,000 per month in dividend income? Now, we're actually going to take a look at 3 individual stocks and 3 funds to get an idea of the differences between them to make $1,000 per month. For stocks, we're going to take a look at Apple, GlaxoSmithKline, and At&t. Then for index funds, we're going to take a look at VTI, which is Vanguard's Total Market ETF, DVYE, which is iShares Emerging Market Dividend ETF, and FZROX, which is Fidelity's Zero Cost Total Index. Now, when trying to figure out a stock or a fund's dividend payout, there are a few things you need to look for. One is the stock price, and then the other is the dividend yield. And this is going to give you an idea of the annual dividend that you can receive for that asset. And the equation to figure out the annual dividend payout per share is pretty straightforward. You're going to take the stock price and multiply it by the dividend yield. And this is how much you could estimate per year for each share. But as price shares fluctuate and so do other factors, so could your dividend. So this is more of an estimate. So let's see how much you would need in each of these companies to get $1,000 per month. Now, the first thing you're going to notice is the share price for each of these examples ranges. We see a little over $14 for FZROX to over $200 per share for VTI. But just because the share price of a stock is high or low doesn't mean the stock with the higher price pays out more dividends. Because when you look at the dividend yield, you can see the range is pretty large as well, going from 0.6% to over 7%. So from here, we need to run some numbers, so let's do that. Now, Apple has a dividend yield of only 0.6%, and the dividend payout is about 82 cents per share annually. So you would need to hold about 14,557 shares of Apple to earn $1,000 per month in dividend income, which means you would need to have almost $2 million invested in Apple, which is a lot of money to invest. Then looking at GlaxoSmithKline, their dividend yield is pretty solid, coming in at 5.8%. So their annual dividend payout would be about $2.05 per share. So you would need to have about 5,848 shares, which is just about $207,000 invested in GlaxoSmithKline. Then At&t has the largest dividend yield in our examples, coming in at 7.2%, which would give you about $2.08 in annual dividends per share. And that means you would need about 5,769 shares, which is about $167,000 invested with At&t. Then we get to our index funds or ETFs. Now, VTI has a dividend payout of 1.7%, and that would give shareholders an annual dividend payout of around $3.45 per share. So you would need about 3,478 shares, meaning you'd have about $705,000 invested in VTI. then DVYE has a dividend yield of 4.8%, giving a total annual dividend of about $1.82 per share. And that means you would need about 6,591 shares, investing around $250,000 into DVYE. Then lastly, we're going to take a look at FZROX, and this one's actually a little bit different since it pays its dividend out yearly instead of quarterly like our other examples. But the dividend yield for FZROX is 1.27%, giving an estimated 18 cents per share annually. So that means you would need about 67,347 shares, which is a lot of shares to need, and it would total just about $945,000. Now, this is really just meant to show you that the amount of money you would need to invest to get $1,000 per month is going to vary, and not that one stock is better than another, because there are other things to consider for a stock than just its dividend yield. And I am not saying go dump all of your money into At&t, because I'm not saying that at all. Because depending on how you invest, the amount of money you need to invest to earn $1,000 per month is going to be different. For example, I personally invest in index funds or ETFs instead of individual stocks. And while their dividends may be lower than some individual stocks, they do provide more diversity than individual stocks, so I'm fine with that. Now, you may be watching this going, great. All this tells me is I need to invest a lot of money to make $1,000 per month in dividends. And yeah, you do need a sizable amount of money in the market to make that happen. And you may not have that today, and that's perfectly fine, because that is where the power of compounding really comes into play. Because while you're putting your money in the market and letting it grow, you can choose to reinvest your dividends back into that stock or fund instead of taking a cash payout, which is something I think you should absolutely do, especially as you look to grow your portfolio. Because when you do that, you buy more shares with those dividends. For example, if you had $10,000 invested in DVYE, that means you own roughly 263 shares. And using our numbers from earlier, that means you would earn about $119 in dividends per quarter. And if you reinvested that, you would buy an additional 3 shares of DVYE. And if you do this quarter after quarter, slowly you're going to add more shares to your account just from the dividend reinvestment alone, and this is going to help grow your overall portfolio. Now, 3 shares may not seem a lot when you're looking at it this one instance in time, but over time, as you invest more money, you're going to own more shares. Then as the stock grows, you'll start earning more money from those dividends, which in turn buy more stocks for you when you reinvest. Because it might be 3 stocks today, but then over time, it'll turn into 4 stocks, then 6 stocks, then another 10 stocks when you reinvest. And when you start to count that up over time, those little bits add up to a lot of extra stock. And that was all money that you didn't have to add yourself. Instead, you let your money and time work for you in the market. And this makes your account grow even faster. And that is the power of compounding here. But this does bring up the issues for stocks or funds that pay out their dividends annually, like FZROX. Because the stocks or funds that pay out each quarter, you can reinvest those dividends more frequently so you can have more growth over time. The yearly dividend payout can actually impede this since you only get to reinvest once per year instead of 4 times per year. And this definitely adds up over time. Not to say these options don't have their place, but they definitely have their drawbacks. Now, making $1,000 of passive income per month from your investment dividends, it is possible. But the reality is for many of us, it's going to take time and consistency to invest your money in the market, which means putting away money every paycheck, every month, every quarter to keep increasing our portfolios. And this can be done from 401ks, IRAs, brokerage accounts, and other options as well. And reinvesting those dividends will be extremely important as you look to grow your investment portfolio. And over the years, those little bits added from your dividends will make a big, big difference. And at the rate at which you'll get there, it will also depend on your investment allocation. But you can see that both index funds and individual stocks can have great dividend yields, but you can also see they can be on the lower side. But if your goal is to earn $1,000 per month or more in passive income from your investments, time in the market is going to be your best friend. So if you haven't started investing yet, the best time to start is right now. So tell me, what are you investing in to help you reach your goals? Hey everyone, thanks for tuning in this video. If you want to help support the channel, take a look at the links down in the description below. And if you know somebody that could benefit from this video, feel free to share it with them. And until next time, safe travels and take care.